Hello and welcome to the next lesson. We are going to put everything together, but we're also going to do it in the most simplistic form. And we're going to pick some things that we've obviously learned from the mentorship so far. And I want you to realize first and foremost, if I turn around and say I'm trading off of fair value gap, for example, that doesn't mean that that's what you're going to do. So I'm writing this trading checklist which is going to be yours to keep forever. And you will, whether you realize it or not, you will adjust it ever so slightly. But what I've done here, I've written the first key fundamentals towards it, which obviously are what we should be doing before the training day starts. Now, I don't want to sound cringy when I say some stuff like this. For example, sleep and recovery, hydration, exercise, movement, because it's your life. At the end of the day, it is entirely your life. You don't have to do any of this. Now, personally, I think you should. And this is what's going to aid you in a better trading career. I think one massive thing, especially in the top three, is if you are not in a good headspace prior to your trading day, you should not be trading. You are playing with a lot of money, or you will be playing with a lot of money. So you need to make sure your headspace is in the right place. If you're having a stressful day, don't trade. If you've had some bad news, don't trade. If you feel like something's going to detriment your trading performance on the particular day you're trading, don't trade. And all of that can be aided with sleep recovery, with hydration, with exercise and movement. So they're not me telling you what to do. You can do whatever you want. This is just a guidance, I feel like. And obviously, the other things that come in mind with the news, the environment, making sure that it's distraction free, workspace friendly, making sure you're organized, making sure that your internet is ready, your platforms are ready, your charts are ready. And the last thing here is obviously the risk, making sure that you understand that every day is still a coin toss, no matter what the edge, and you are still. You are still on the understanding that you should only ever risk what you can afford to lose, even if that's in a funded account, whatever. So again, in terms of chart stuff, the first thing is obviously confirming market conditions. Now you need to, and this isn't something we're going to cover in this lesson because I don't feel like I need to. I want to get into the good stuff. But what I mean by market conditions is trying to understand if we're in a bullish market, a ranging market, if we've got some high impact news to come, which obviously you're going to utilize Forex Factory for as well. So the one we're going to talk about today is really the bias check. We need to establish what your bias is likely to be before you actually trade. Now, I always make up my mind on a particular trading bias before I actually take a trade. So for example, I don't come to the chart thinking I'm going to buy or sell. I'm thinking I'm going to buy. I'm basing it off of what I think the likelihood is if a price moving in a certain direction on that particular day or week. Now, I've spoken about swing point highs and lows before. And a swing point low of a trading range is when you have the middle of a three candle formation. This here is called a three candle formation. That there is a swing low once you have identified one middle candle with the wick that is lower than the two either side of it. Vice versa, for a high, it is when you find a wick in the middle of the three candle formation that is higher than the two either side of it. You invert it to get the true result. This is how you are going to identify a trading range. So, as a very good example, and this is stuff you've already learned, you would find a three candle formation in here to identify a range. you would equally find a 3-candle formation up here to identify the top of the range. And if you go to just, I don't know, let's just go to a random chart, what I can try and picture out for you is a situation where we could potentially see a 3-candle formation. So for example, right here, we have got this low, and either side of it, you've got that wick, and you've got the one up here. So that's a low. And then right at the top of this particular range, you've got this high, and either side of it, there are 2 wicks, 2 candles below it, which is higher than. So the range is from this low to this high. So if I was measuring this range, I would be measuring it from top to bottom, just like that. That is a trading range that I'm identifying. So now what we obviously want to try and do is utilize a 3-candle formation to help us discover what type of bias we actually want to achieve. So we use 3-point candle formations with this. And again, this is fractal, but I'm going to be referring to the weekly time frame and the daily time frame, because this is going to give you the highest probable setups. And this is what I do. But this is fractal. It works on a 1 hour, a 15-minute, it works on everything. So what we're trying to establish is really what the next candle is likely to do. So for argument's sake, let's just say we're in a downward trend. Obviously, a true candle would, if this is where it obviously closed, this would be a candle like this, for example. And if we can identify out of 3 candles, the first 2 have printed, if this particular candle here has closed lower than just this one candle here, there's a glimmer that we are going to create a 3-candle formation. Now, there's a couple of things could happen, essentially. And that being when the candle obviously closes here or opens and then carries on moving lower and then ends up bullish or whatever happens, and the wick, for example, will come down here, then that's now invalid. We're not looking to use that as our candle formation. We would then think, okay, this could potentially be our candle formation, and we're just going to carry on moving in our downward trajectory, moving lower. Sorry, I can't say that word. But there's a few signs here, which we're going to basically look to utilize with this particular candle. And it's all down to how this particular candle actually closes. If we have a situation where, because in a candle, you have an open, which in this example is here. You then, within that example, you would, this particular candle on this random day or week would have a high, which we can see here. It would equally have a low. And just before I go any further, I don't want you to think we're going right down to the basics in the beginning. What you have to realize is that we never left the basics. And this is what's going to be really quite a big light bulb moment for you. So stick with me. There's a method to my madness, and I've led you here for a reason. So this is your candle, high, open, close, low. So the next candle would obviously open like this. Now, let's just say this particular candle is week 1. I don't know. So the next candle, this is week 2. Now, this candle can close here. There is a certain level that I'm watching with regards to where this particular candle closes. So again, we have an open of a new candle, and then we have a close of a new candle. If this candle closes lower than the low of this particular candle right here, then I would anticipate this is going to continue moving lower. And this candle that we currently have sitting here is probably not going to come of anything. Because what we are showing is that there is a lot of, there's buy orders and sell orders everywhere, but there's more sell orders than buy orders. So basically, this is extremely bearish, extremely bearish. Now, what we could have is another situation where this candle closes bearish still, but actually closes a little bit higher, and it actually looks something like that. If we are able to identify that we've created a new swing low, which is here, and then we can identify that the close of this down candle closed above the low, or above this low right here, this is an anticipation that there is potential that we could end up with the next candle trading higher. So what we're actually doing here is identifying that this candle has closed above the low of week one's candle. So I'm now interested. I'm not interested in trading week one and week two in this instance. I'm looking at what week three is likely to do. Now, if week three is going to move, in fact, move higher, I would measure this particular wick right here. And I would try and gauge the upper half of this wick. And to complete my bullish momentum, for me to want to play bullish on this, I would be anticipating that we respect the upper half of this wick at least, and then carry on moving higher. If we do not respect the upper half, I would anticipate we'd continue moving lower. So I'm looking for a confluence or a fair value gap or whatever confluence you like to happen or be inside the upper half of this particular wick. Because this isn't a trading range. I'm not looking to identify premium and discount. I'm instead utilizing the 50% marker. So if this candle, and let's just say, for example, this candle actually closes quite bullish and looks something a little bit like that, and this is actually now what it looks like, then it would obviously be finishing in a bullish week. And I would be, instead of measuring the whole wick, I'd probably just measure the whole candle. And I would want the upper half of this candle to be respected to maintain bullish price action. Because if we finish on a huge bullish move, and this is a weekly or a daily candle, it is quite unlikely that price is going to come all the way down here. So we would like it to try and respect this part here to then push higher. If this particular candle actually engulfs the entirety of the previous week candle, that is an extremely incredible sign, because not only have we closed above the low of this week one candle, we've actually closed above the original opening of that particular week. We've entirely engulfed it. This is a huge shift in momentum of price. And again, I'm not going to measure the wick. I'm going to measure the whole candle and hope that we respect the upper half of this particular level right here to keep us pushing to the upside. But it's worth remembering the first instance we're looking at is just to monitor if this particular candle has closed above this particular low right here. Again, if this candle closes lower and it looks a bit like that, I'm anticipating more bearish price action. Now, this isn't, I mean, it is amazing information, but it's not a guaranteed answer. This could easily close like this and continue moving lower. But what I want you to do is actually backtest this a little bit and look at these particular candles and try and identify, for example, the very, very, very top one here. This candle closed here. The opening or the close of this candle was actually all the way down here, which was lower than where price traded. So you would anticipate that this candle would go lower, and that's exactly what it did. And you want, because we didn't really create a big wick, we actually created quite a large candle. We want the upper half, or the lower half in this instance, of this particular candle to be respected. And then you can anticipate lower prices. You can find plenty of trading opportunities in here. Obviously, note, this is a weekly time frame. This is what makes identifying bias on the daily time frame so much easier, because every single day you can look at each particular candle and identify swing highs and swing lows. So as a good example now, on pound USD, where we currently are, this was the last high. Price action closed down here, miles under where this price action traded, and we've been trading lower ever since. I would anticipate this will continue moving lower until we create a movement where the next candle would close above. So if this candle here, for example, closes above this particular low. So go and back test this. Let me know if you have any questions and start utilizing this to help aid you with your bias.